Hello and welcome to another edition of Stockwatch. So I've been taking a look at the main news articles this week and headlines, and it seems that big technology companies are breathing a sigh of relief after the Supreme Court has sided with Google in its copyright dispute with Oracle. So the High Court said Google did nothing wrong with copying code into developing their Android operating system, which is now used on most smartphones. So basically what the story boils down to is in the early days of the smartphone industry, Google used more than 11,000 coded lines in order to make its Android operating system compatible with its widely used Java software, and this was actually later acquired by Oracle. So using pieces of Java code, also known as APIs, it made it easier for Java developers to adapt their assisting programs to run on Android, which was quite a big advantage at the time for Google over its big tech competitors such as Apple. So the case has been going on for over a decade when Oracle initially filed a federal lawsuit against the company in 2010 for alleged infringement on patented Java technology by Google's Android operating system software. So Google first won the first time around, and when a judge rejected Oracle's copyright claim, but obviously then Oracle did appeal and then it went to the Supreme Court. But this week actually the Supreme Court filed 6-2 in favor of Google, describing the copyright as fair use. And as I said, the outcome has been very favorable to a lot of other tech companies, both large and small, for Microsoft and IBM to name a few, as these heavyweights were banking on Google to win the case. So, but you have to think to yourself, if taking 10,000 plus lines of embedded code without permission is legal, why should people copyright software in the first place? But the prices for Oracle didn't seem to deter the stock, as shares actually rose by over 3% this week. So we'll take a look at Oracle shortly. I just want to take a quick look at Google, because the last time I looked at it, we saw this progressive upturn trend line, and I was looking at a bit of a hummingbird action going on here. We didn't reach this particular peak here, but now what I'm looking at is another go on this progressive upside. We don't see any downside momentum at the moment. You could say there is a slight bearish divergence on the RSI, but it's only slight, and it probably won't be enough to slow down the price action from going to the upside. I just want to zoom in a little bit more on the areas of interest like I usually do. So the Ichimoku cloud is trading very far away from the prices at the moment. So at the moment it's very, very bid. Analyst reports have said it's a buy. It was overweight at one point, but now it's gone onto a strong buy position. So I'll be looking probably to put in a buy and probably see if it's going to take this particular level here, which roughly is about the 2,300 mark, and then we can push for further record highs to the upside. So recovering very nicely from the first wave and second wave of the pandemic. If there is a third wave, we'll just see if that's going to push things higher, because obviously there'll be more people remotely working from home and obviously relying on other ways to operate without going into the office or traveling. Same with Oracle as well. As I said, we saw a 3% upshift. It's slightly consolidating now, but what I'm seeing is more of a bearish divergence here on the RSI. So I'm just seeing if prices will start to wane, momentum starts to falter, and if we're going to see a little bit more price action to the downside. If that does happen, I'll be looking for the recent peak for it to fall where it's kind of finding a little bit of support at the moment, and then we'll see if we can start filling these gaps here around the 70 mark, and obviously back down to the top border of the Ichimoku cloud. So these are the things that I'll be looking at in the next couple of trading days. I just want to bring Oracle down on intraday as well, just to see what the potentials are. So as I said before, when we're trading very far away from the Ichimoku cloud, the bias is on the upside. But as I said, prices are starting to wane slightly. So I'm looking at this area as a support. If we break through that, then I'll be looking at the first level will be the lower region of the $70 mark. And if we progress through that, then the lower area of the Ichimoku cloud. On the daily chart, we're looking at about the $68. On the intraday, we're looking a little bit lower, roughly just under that level and falling downwards. As you can see here, There's not really much of a divergence on intraday. So that's why I'm thinking we'll see a bit of consolidation for the time being. And then if we do see prices fall through this psychological level, then I expect prices to start falling downwards, roughly to where we were standing at the beginning of last month. So just a few things to look out for. Obviously, we've had the detrimental news for Oracle, but it hasn't seemed to really impacted prices at the moment. So just something to look out for the remainder of the trading week. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead and bye for now.